Eric Muathe, Muathe.com. Now, one thing as traders we know is that we are always forced to pick one direction, or at least combine two disciplines, either fundamental analysis, where you look at the company's financials and all that, or you take a look at the other view, which is a dry, cut and dry view, which is the technicals or looking at the charts. Now, I don't know which one is right. Some people combine both of them, and I believe they are all okay. The problem I have with purely looking at the fundamental side of things is that there's no timing aspect of it. Let's take a look at this stock here, HL, and we are going to take a look at the period where it had this nice run from the beginning of 2016. So a nice run here. Of course, you'd have loved to have owned this. It doesn't matter whether you use fundamental analysis or whether you use technical analysis to own part of this move. As long as you own this move, you don't care. Now, I'll show you the problem I have with fundamental analysis. Number one is, yes, the stock had a great move, but there's nothing unique about this move because frankly, the entire sector, now this is the GDX, the mining sector, was moving higher. So it didn't matter whether the technicals were good on the stock. The big picture was that the miners were moving. So let's say you spent a lot of hours looking at the financials of the stock. The thing that took it higher was not the financial situation or the outlook of the company, but frankly, it is the sector-wide movement and the movement of the underlying gold index during this time period here. So what I'm trying to say here is, yes, you can use fundamental analysis. Nothing wrong with that. In fact, it's a good idea. But I think it's a good idea to also incorporate some type of technical analysis because it gives you a window into the timing aspect. And here we can see one of the reasons why the miners were moving higher and why some of us were playing this move is because they met the minimum requirements at the beginning of 2016. It's very simple here. We can see that during this period here, when they start moving higher, there's no secret that they were moving the RSI to 3-year highs. MACDs were moving to 3-year highs, and that's all you need. You can check the description. I call this the ultimate Muathe breakout. Those who follow me, you know this, that this was the time to go along the miners. Nothing to do with fundamentals. The timing was right. They met the minimum requirements. So GDX was breaking out in early 2016. Take a look at the stock itself. And of course, that's the name of the company. And it is in the mining space. So no question about that. So while the mining ETF was breaking out, you can see here, the stock also met the minimum requirements. Now let's take a look at that. We can see that clearly. RSI was moving to 3-year highs, which is one of our minimum requirements. And at least one of the MACDs was also breaking out to 3-year highs. In fact, here we see that both MACDs were breaking out to 3-year highs. We only need one of the MACDs to do so. And we're talking about this time frame here, this window, somewhere there. We can see the breakout. You can even take this breakout here as an entry. So it did not matter what the technicals, it didn't matter what the fundamentals were saying, but the technicals were telling you the timing was right. So if you are using both fundamental analysis and technical analysis, and if the fundamental analysis told you that the company looked good, the timing would have been best if you had taken the technical view, and here it met the minimum requirements. So if you want to improve your timing, definitely you might want to have to add on some of the fundamental analysis. Now I'll show you something here. You can see since about middle to late 2016, stock's been down. So what does that got to do with the fundamentals? Not much, because fundamentals, I'm sure, stayed pretty much around the same. And you can see this is the reason why it is down, has mostly to do with the sector being down. You can see that the GDX is off the highs since then. So it's a sector thing, has little to do with the financials of a single company. In other words, we are always at the mercy of the general market, and we are always at the mercy of the sector. Now keep in mind the rule of thumb is 75% of the stocks you own are going to be moving in the direction of the general market. So 75% influence of the general market is going to dictate where your stocks are going. And then 15% is going to be based on the sector performance. So we better account for this as opposed to spending a lot of time looking at individual stock financial situations and outlooks. So in the description of the video, check this link here, this video on YouTube, where this guy is looking at this from a fundamental analysis point of view around the same time period when the stocks were moving. Okay, so that's a fundamental view, nothing wrong with that. I'm not trying to criticize anybody's work. In fact, go ahead and subscribe to his channel or his newsletter. He's a fundamental analyst, and I'm going to show you my view at the time, which is the technical view. So check the description for both our discussion on the same instruments or instruments around the same time frame to see which one makes sense. I would say a combination of both fundamental analysis and technical analysis makes sense, because at the end of the day, what you want is timing. You don't want to own a stock for 2 years with sideways action. Why not own it just when the sector is beginning to move? Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. Woo!